Hey traders and investors, it's Serge Berger here. Happy New Year to everyone. I wish you all the best in health and happiness for the new year and success in trading. Speaking of trading, Twitter has come up back on my radar. It's a stock I watch very closely and a stock I get a lot of questions on every single week. Let's look at what's going on here. What we're seeing today is a nice little rally. So it's actually a stock that looks to be showing some relative strength here if the market can pull itself together a little bit after the last few days of weakness. So if we look at Twitter, we to continue to see in the bigger picture, basically a stock that had made a lower high in October, but also made a higher low in December of last year. So kind of a stock that through this lens is kind of stuck in what I would refer to as a major sort of wide trading range, and it got quite close to breaking down here over the past few weeks. But it looks like right now, with the strength we're seeing today, it may be doing the opposite, which is kind of probably going against some of the short sellers that are trying to push the stock lower. So if you look at Twitter a little bit closely, what I have here is very simply a 50-day moving average, a 200-day moving average, and a 100-day moving average. These are just reference points, okay? That's important to keep in mind. If I look at this stuff, though, I'm going to get rid of a couple of these moving averages just so you kind of see. A lot of people ask me, how do you build your charts? Like, how do you actually go from, like, how do you walk through the analysis of looking at these stocks? I'm going to get rid of the 100-day moving average, the blue one here, just to clarify things a little bit, get rid of the noise. But I'm going to add a Bollinger Band, okay? And also I'm going to add a relative strength index at the bottom of the chart so you can kind of see what's going on. So from a relative strength perspective, this stock continues to, or has actually showed a little bit of relative strength over the past couple of weeks, and finally today it's popping. So that much is good. Also, from a Bollinger point of view, the trading range that we've been in for the past few weeks has tightened its bands again. And usually for Twitter, it's a good stock like that when it tends to tighten. When the Bollinger Bands come together, i.e., when the stock sort of slows down, it doesn't take too long for it to get back on its feet. So with today's move so far, the stock looks to be breaking or attempting to break out of this consolidation phase. So let's again get rid of this stuff that I just added on here so I can draw some cleaner lines. And you'll see basically what I'm talking about here from purely a price perspective. We are barely breaking above a lateral resistance area somewhere near $38 and let's call it 50 cents. I think a daily close above there could speak pretty positively for the stock for the time being. So there you have it. If the stock can actually hold up there, I think the low 40s shouldn't be too difficult for the stock to get to in the coming weeks. Hope this makes sense. As always, you got any questions, so you can head over to thesteadytrader.com and sign up for the daily trade alerts, or you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.